Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Rocio Wu, Principal F-Prime Capital, the VC firm that creates and invests in healthcare and technology companies. She joins me to discuss the state of fintech and what to expect in M&A for the space in 2023. It's great to have you with us, Rocio. Welcome to Trade Talks.
Thank you. Thank you for having me.
You got it. Give us an overview on how investors weighed in on fintech companies in 2022.
Yeah, fintech was on fire in 2021, wasn't it? However, in 2022, public investors reappraised many fintech companies by prioritizing capital efficiency and shifted their valuation multiples from SaaS to traditional financial business services. So the headline is the F-Prime Fintech Index was down 72% for 2022. For comparison, Nasdaq Index was down 33%. While all the verticals have declined, only B2B SaaS and the payments verticals beat the broader fintech market's average 56% decline and also rewarded with higher multiples thanks to their diversification of revenue streams and a recurring business model.
How are fintech companies being valued now?
Fintech company has been valued in a variety of different ways, depending on the market. So depending on the interest rate, how they are impact the business model. So we see payments, banking as a service, and also SaaS business model have been rewarded with a higher multiples, where like InsurTech, lending and mortgage business model, because of their exposure to credit risk and a credit cycle, their multiples have been compressed, and it's even lower than traditional business model.
Are investors still excited about the fintech space?
Yes, actually, there's a lot of reasons to be optimistic and excited for, because as a matter of fact, fintech companies still account for less than 10% of the total industry, and we are seeing payments making a lot of inroads, but industry like brokerage, they're seeing decline in industry revenue share. And as of despite the decline last year, fintech still outperformed Nasdaq by 139 percentage points, and the fintech index companies still grew last 12-month revenue by 48%. So for scaled fintech companies like Mercado Libre and the PayPal, they still grew at very high rates at 45% and 10% respectively.
What about private fintech companies?
Private fintech companies, last year was the calm before the storm. So we are going to see a lot of market consolidation in this year. It's either M&A activities, depending on the buyer type, transaction dynamics, or sector. The multiples can be very attractive or very compressed, or there will be a lot of company shutdown as well.
And finally, Rocio, in 2023, what can we expect when it comes to M&A?
For 2023, what we can expect for M&A is basically depending on their business, on the buyer profile. If it's private equity, then probably the multiples will be very compressed. We are seeing 2x or 3x multiples. But if it's like stock trade, stock transfer, private companies, merger and acquisition, then the multiples can be higher than like 10x usually.
All right, Rocio, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.